Thank you, Aditi. Thanks for the generous introduction and welcome everyone. Thanks for this opportunity to present you today. This is a topic very close to my heart, having worked with over 2 decades in analytics industry. Analytics is not new for insurance. All of us know that. In fact, for a long time, the crux of insurance business has rested on actuaries and advanced analytics. Surprisingly, even with such a long association, analytics is not leveraged much by insurance marketers. I hope today's webinar will help you realize your next step in the analytics adoption journey and help achieve your marketing goals more efficiently, I should say. So yeah, all of us today are talking about disruption in insurance industry. I was looking through a lot of materials. I was talking to my friends there. Going back to 2014, the first snapshot here is from BCG and Morgan Stanley report published in 2014. This was very clearly mentioned that consumer experience with online channels in insurance lagged behind most of the other industries. It was very evident that there is a big gap and hence scope for new competition to breed in. The snapshot below, which talks about key pressures across the insurance value chain, this I took from a report published by World Economic Forum in mid-2015 last year. Here we see a whole range of disruptive competition from places we as insurers had never imagined. We saw names like Google, Rakuten, Amazon popped up. We saw names from e-aggregators, threats from technologies like self-driven cars, entry of new types of sharing in the economy where people say we will not own the assets, rather share it, and that's where the entire question of ownership went ahead, and so on. And then this year, in fact, as recent as early this year, Feb, there was a news about Google discontinuing its online auto insurance initiative. They used to call it Google Compare. So yeah, so many things we hear about this disruption, even disruption of the disruptive competition sometimes. But what exactly is the point of all this? What all this is pointing to is one single fact. Insurance marketing is going to be tougher day by day. As insurance marketers, our job is going to be tougher by each day. If we as insurance marketers do not adapt ourselves fast enough, we will lose out significantly. That's the only point that I wanted to show here. This is my favorite slide, and I'm sure all of you will agree to it. A very common question that is often asked with insurance marketers: what is your #1 priority? A lot of people I've heard saying answer like finding the right set of customers. That is my #1 priority. And this is one place where I somehow disagree. Unlike a retail scenario where there are cases like impulse purchase, within insurance we all know customers always do their preparatory research. So when they actually are coming to us, the most critical aspect in that is actually the timing, the time when we engage with them. So if we engage with them while they are starting their preparatory research, we will be ahead of the competition. If we miss them that time, we really will get a tough time in terms of gaining their mind share and in terms of converting them as a customer. So what I say the #1 priority for insurance marketers is really to engage the customers at the right moment. And it is analytics which can help us know that right timing. No wonder it is becoming more and more important weapon as an insurance marketer's arsenal. Yeah, so whenever I talk to my colleagues, my friends in insurance industries, the most common dilemma everyone says, we want to use it, but but there is a resistance in place, and the reason for this resistance is that as a carrier, we are dependent on the distribution network, most of which are actually third-party agents, not even our own employees. So is this really a showstopper? Is this really the main reason why adoption of analytics is a bit slow for insurance marketing? Is that the real reason? I say this is a perception error, and the way we can clearly describe it is by comparing it with a parallel industry. We all know consumer packaged goods industry is one industry which has by far more distribution than what we talk about in insurance. This is the industry where, in fact, marketers are solely dependent on the distribution to get customers. In fact, it is to the extent that CPG companies, CPG marketers will have lack of data about the end customers altogether. But yeah, even it will be surprising for all of us to know that CPG marketers spend much more on analytics that we as insurance marketers do. This is one surprising fact that we all need to accept. And I always say that we as insurance marketers are sitting on a gold mine of customer data. If we do not remove the dust now, we never know what is the value that lies beneath it. Let me try to explain it with help of a simple example. The example for illustration here is about a fixed annuity product marketing. So what as a marketer, I start my activity by building a buyer persona. So typically, with most of my clients that I've seen, this is the kind of buyer persona that we always start with. Typically, the demographic details, a bit more about his income, more about the family. But the biggest question is, despite having all these key demographic details, do we feel we are good to go ahead, make our personalized pitch to this customer, say Dr. John in this case? Are we really sure we can make a personalized pitch with this amount of information to him? Let's relook at this situation with some additional points of information about Dr. John. Now, what if we have information about his priorities? He has to support his daughters to college. He has to maintain an upscale lifestyle. About retirement, he is a traveling enthusiast. Wants to include vacations. He loves cars, house improvements. What are his pain points? So, where does he finds challenges? What motivates him? What kind of needs does he have? What kind of habits does he showcases? What does he read? How does he share his thoughts with others? What kind of tools or channels he used to research to find out about information? So with these amount of small data points, it really helps us to build a more rich buyer persona. And it's not really difficult. All of us as insurance marketers know this is not really difficult today to know all these details. From as plain simple fact as what Dr. John might be flipping through on our website, what pages he might have spent most of his time, what all material has he been downloading. If he has logged into our website using his social media account, we have a whole plethora of additional information about his tastes, personal choices from his social media account. The question is, are we actually able to use that data today and then make a more personalized pitch? And then as on the go, can we actually provide a suitable pitch to Dr. John and engage him with a more fruitful talk going forward? So here is what I recommend to all of my clients, all of my friends in the industry. As I said earlier, I always start analytic strategy by understanding our position in the journey curve. So this is a journey curve that I always use and leverage to start any discussion around this. As we move ahead in the maturity curve, essentially, our competitive advantage increases exponentially. The journey, as we see here, essentially consists of 4 key stages that help answer questions for insurance marketers. So typical questions across these 4 key stages that we answer, that we always start with what happened actually. Can we actually describe? Can we know what really happened? Can we visualize that? Then why did it happen? And what if few more things have to change? Uh, Followed by a prediction of what is going to happen next, and finally optimizing and coming into a more prescriptive mode about what are the actions to be taken. So across this journey, really it starts with raw data and capturing of data that we see as the starting point. In digital world today, we all of us, most of us in fact, are from digital background. These things start with simple plain technologies like tag management or digital analytics tool which are there with us. Cleansing of data and organizing it is very important step. I typically find a lot of us in our community already mastered this stage, so we most of us are way ahead for this. Standard reports that we see are typical reports in whatever form and shape they are, but the idea is these reports, we cannot drill it down, but they are static reports which are presented so that we can crunch numbers better. The limitation here is we cannot drill down, we cannot really perform any further analysis on these reports, but they had been useful to us. The real value, which I say starts, is after this step, and that's where OLAP analysis, multidimensional analysis helps. So for a senior management, a static report is good to have, but if I want to know for my territory, for my respective region, what has been the specific things that happened, and then I want to drill it down further to know the root cause of those numbers, then I need to have a basic OLAP in place, and that's where ad hoc reports come handy. So we'll discuss this more in the coming slides, but before we move forward, really, I would love to have a small poll. May I request the team to have the poll open? So essentially, keen to know within your organizations, where do you see you fit within this analytics journey curve? So is it really? So is it really you are able to get clean data but unable to generate standard reports, or you are able to generate reports but unable to perform OLAP analysis? So do you find somewhere here, or able to perform OLAP but unable to perform predictive, so you find somewhere between this, or you're able to perform predictive modeling, you're already at an advanced stage, or you really see yourself as the last stage where you're able to leverage prescriptive modeling or optimization. So let us vote. Let's see how it comes up. I'll request you all to be very honest. Let's not be have any bias because of the crowd we have. I know all of us feel that our organization is the best. What we are doing is the best, of course. But in this poll, may I request that let us be honest. Let's see it comes out. Believe me, even largest of the large organizations are not much way ahead in the curve. So let's not be biased in any way. Okay. So what are the results? What are the results? Okay, interesting. So what we have here, more than 60% of us are able to generate standard reports, but somewhere here, yeah. So this is typically what we see across the industry. It's not something which is a very unique kind of observation. It is really one of the most common answers that I get across the polls. Thank you, Varun, for showing the poll results. Can we have the slides back? Okay, perfect. So really, just as I said, the starting point really is first putting out ourselves honestly. Where do we fit within this curve? So for majority of us in the call today, we find ourselves somewhere between standard reports and ad hoc reports and all that. So what should we do from this stage? All of us want to get ahead. We want to get into a more predict and act kind of scenario. But should we straight away jump, have a big strategy from this stage to final optimization? Multiple people have multiple opinions here. My personal suggestion always has been, let's not jump big leaps here. Let's always have baby steps, and from there. So for example, if we are somewhere between standard reports and OLAP, I will always say let's have one step forward at a time. Let's first work on ad hoc reports, OLAP, and our target stage should be one step ahead. So whenever we take one step ahead, it always helps us to bring about results, showcase it to the management, get their buy-in, and it makes our task easier as a marketer to get investments from the management going further. A brief about how do we do it, what do we do within these steps. So step one, as we said, is about describing what happened, and to move into a more OLAP kind of analysis or multi-dimensional kind of analysis, there are a variety of good BI tools, there are a variety of great warehousing technologies. Some of them you might have been using, like Tableau, Domo, ClickView, Power BI, and so on. Plethora of those good tools out there. But the real beauty is really is to first define the right KPIs we want to track, right objectives that the business wants to achieve, the functional objectives from marketing, our KPIs, and then we backtrack what data do we have available. We should never go with the data approach first. So we always go by the KPI approach or the business objective approach first. That's the biggest point that I always advise my customers, my friends here, that once we define our strategy, once we define our KPIs, that's when we go about the integration, connectivity of data. We find out what all data do we have, is it sufficient or not to publish those KPIs, and then we move ahead and implement the dashboard. Step two really in the curve is why something happened, if it happened. So for plain simple descriptive analytics or diagnostic analytics comes very handy in this case. These are typically quick studies, say 3 weeks to 5 weeks, and but they really provide very powerful information and insight to marketeers. For example, if we did a major design change in our website, did it really affect the traffic, the quality of traffic, the volume of traffic because of the design change, or did it not? So we had invested X dollars in that activity, whether it was design or content, or it was maybe we made our website responsive, we launched a new mobile site. So those kind of actions, did they really lead to significant output in terms of ROI or not? So these are the questions that as marketers we always have to tell our management in terms of business case. So once we have that kind of data, simple usage of statistics and hypothesis testing can help test and prove statistically that because of these factors, the quality of traffic or the ROI was achieved by this much influence. So yeah, small, quick studies, but these help us move into the next layer, get more management buy-in, and have a good further progress. Really, the step three, I'll say the last is the prediction and the prescription mode. This is where the real power of analytics comes in. Most of us have been using advanced analytics, big data in our risk and actuarial side of things. But when it comes to marketing, this is really the step where now all of us need to align ourselves. Whatever be the data types, whether it is structured, say in tables, rows, and columns, or unstructured like of text, all this can be brought easily together using big data technologies today. So data management has become really advanced. Lots and lots of technology pieces in place which can help bring data across multiple data sources, whether it is your web channel, mobile channel, social, even offline channels. So all that data that can be easily brought together using data management technologies, services, and we have the power of big data, Hadoop, to really have it at the right desired state. And then advanced analytics is there to help us across the entire customer life cycle. So typically for insurance marketers, if we see our cycle from identify to attract, to acquire to engage, retain, and then loyalty or exit, across the life cycle, this rich amount of information that we have gathered combined with big data and advanced analytics technologies, it can really lead to deep, greater insights for our business. So to give you small examples, all of us talk about segmentation, but segmentation beyond demographics based on behavioral patterns, based on the taste we have, based on the pattern we have shown on our website, on social media. So segmentation based on multiple variables, multiple patterns can really help jot down the right set of customers. Simple things like propensity analytics, how much propensity somebody has to buy X product versus Y product, those kind of things have. Similarly, all of us today talk about personalization, but personalization is, end of the day, the heart and core of all the initiatives in personalization is analytics. So if we want to attract, engage the right customer, we can never let him go without a personalized approach. Not delving deeper into each of these topics, but really advanced analytics is the crux where we all want to achieve, from recommendation to loyalty. That's what the ultimate goal from insurance marketers that we have from analytics. Let me quickly talk about some of the use cases. I brought about 2 of these use cases from my customers. So the first one is about distribution management. Essentially, this is one of a global P&C insurer that I work with, and they leverage analytics for their distribution management. The real objective that they wanted to understand was the impact of their agencies and agents on cancellation and renewal rates. So how we proceeded with that, we analyzed various data related to their agencies, the past customer behavior with respect to cancellations, renewals, and how does this data fit into each of the agents, the agency's data, tools. If I talk about tools, from OLAP analysis to advanced analytics modeling were used here. Uh, uh, the best part was the outcome of this entire study. So very encouraging outcome, 30% fewer cancellations were seen among the agencies where we took this initiative versus the agencies where this initiative was not taken. So now this initiative has been rolled out across all the agencies that they work with, and results are phenomenal. Uh, Second use case study here that I want to talk about is this term ABM. A lot of us might have heard this term. A lot of us might be searching for it. So we are working with a leading B2B. So this is account-based marketing. ABM is applicable for B2B insurer scenario. This was essentially for a leading B2B insurer, how they leverage analytics for their account-based marketing campaigns. So the entire heart and core of an ABM was the segmentation of right kind of prospective accounts or companies that they want. So it was basically for a small and medium enterprise environment that they were targeting. So within the SME target base, within the SME target space, what should be the right kind of segment that they need to approach, what should be the right kind of message. So for example, if that segment of SMEs are doctors versus lawyers versus uh, some other businesses. So what within those segments, based on the behavior of those people, there was again reclassification. And for them, what should be the ideal content to be sent? So in this case, it was email marketing, which was the main channel to interact with the end customers. So for those email marketing campaigns, what should be the right content that should be sent? And based on that content for the specific tech segment, what should be the propensity of the end customer to respond? With all this, what we saw is 40% higher response rate from the campaign. So again, very encouraging results. The entire motive behind launching the campaigns to engage better with their SMB customers was very encouraging. So yeah, just last few minutes, I wanted to talk a bit very quickly, talk about eDynamic, who we are, what we do for insurance. We are a large marketing technology firm spread across 4 countries. We have expertise across financial services, including insurance, asset and wealth management, cards, banking, work with 50 of the Fortune 500 companies, and really marketing technology is what we breathe in, breathe out. Some of the customers that we work and the kind of work, from websites to CMS implementation to mobile analytics is what we discuss. So not taking much time here. Digital marketing analytics, this is the domain most of us belong to. Here we start with the capture and measure step, from tag management to analysis, what kind of traffic is coming, attribution, and then improvement in terms of search, personalization, targeting, to go ahead with things like optimization. Plethora of tools today, it's like they are a bunch of tools, from Adobe to Google to Cyton to Oracle to Sitecore to Thunderhead, multiple tools that are there in market we work with and partners. So yeah, here I'd like to have your questions, if we can open the forum. We'd love to hear from you, your feedback, suggestions, thoughts.
Thank you so much for that insight, Rupesh. It looks like we have a few questions. So the first question is, what is the typical cost of a descriptive analytics study you referred?
Okay. These, as I said, these are quick studies, not very long in duration. So from 3 weeks to 6 weeks, typically will span from uh, around $8,000 to $20,000. That's the typical range, but it really depends on what we want to achieve and what's the kind of scale we are looking at. But that's typically the range we see.
Yeah, there's another question. The question is, what do you recommend for customer journey analytics on carrier website?
Okay, this is interesting. My favorite. Customer journey analytics is something a lot of us are talking today, especially because we have multiple channels. All of us talk about omni-channel approach. We talk about customers who are moving from one device to another, and can we and especially when the users are anonymous on our websites, how do we track their journey from one device to another and then from one stage to another. There are multiple good tools available in the market. My personal favorite is a tool by a company called Thunderhead. They have a tool called One Engagement Hub. So that's good, but again, saying there are multiple tools in the market. It depends on your need, how do you feel, what exactly do we require from the situation. But yes, this customer journey analytics is very useful in terms of giving the right visualization of where the customers are really dropping out in the journey. Yeah.
Yeah, Akhil, there's another question.
Sure, sure.
I'm using GA on my website and need a better visualization. Which tool do you recommend?
Okay, this is a very I'm really glad you asked this. This is a very typical question a lot of us in marketing ask. Can we try out? So Google Analytics is very common for being used for our website analytics. But typically the interface provided by it, is it really sufficient for our needs or not? That is being decided by the business teams, the KPIs that we want to track. My personal suggestion always is, in case we need to have better KPIs and better representation, it is always advised to have another BI tool sitting or taking the feed from Google Analytics as well as multiple other systems. So Google Analytics should be one source of information, but other sources like our marketing automation platform, our CMS platform, our CRM, when we get a picture which is holistic across all these platforms, that really helps. So there are multiple tools in the market, likes of Domo, Tableau, ClickView. Yeah, using the right tool and integrating it with the right systems, that's what I'll recommend.